Hi traders, StarseedFX here. In this video, we are going to learn how to predict market movement pretty accurately. What we're going to share with you is one of the best trading strategies that has the highest probability trades for any market and any time frame. This tutorial can help you become a better trader and have more winning trades, because now you will see a trading chart differently. Let's begin. Chapter 1. How to predict market movement pretty accurately. There are 2 golden rules for you to be able to predict the market direction pretty accurately. Number 1, understand the market's highs and lows. The first thing you must have is the ability to read the highs and lows of the market. I understand that reading highs and lows of the market can be very subjective, but when we look at the chart, we can actually spot the most obvious highs and lows of the market. Now, all you need to understand is the difference between a higher high, higher low, lower high, and lower low. The chart you're seeing now shows it all. Look at the chart. You will notice that there are peaks, H1, H2, H3, H4, and H5. By quick inspection, it is very clear that H2 is lower than H1. Therefore, H2 is a lower high when compared to H1. Now H3 is lower than H2. Therefore, H3 is a lower high compared to H2. H4 is higher than H3. Therefore, H4 is a higher high compared to H3. And H5 is higher than H4. Therefore, H5 is a higher high compared to H4. You will also notice that there are dips, L1, L2, L3, L4, and L5. When you compare L2 with L1, you will notice that L2 is lower than L1. Therefore, L2 is a lower low. L3 is higher than L2. Therefore, L3 is a higher low compared to L2. L4 is higher than L3. Therefore, L4 is a higher low compared to L3. And L5 is higher than L4. Therefore, L5 is a higher low compared to L4. Once you understand the difference between highs and lows, your trade is as simple as AB equals CD. The AB equals CD trade secret: buy only at a higher low. Sell only at a lower high. AB equals CD rules. Draw Fibonacci retracement from A to B. Find your A and B from an obvious level of previous high to low. C is the retracement of A and B, preferably reach 50% or 61.8% or 78.6% of Fibonacci before making a reversal to reach D. When the criteria are met, price usually reaches a negative 27% level of Fibonacci, thus becoming D. The length of AB usually equals that of CD, thus AB equals CD. Your entry is always at C, where C is a lower high in a downtrend for selling, or C is a higher low in an uptrend for buying. For buying, C cannot be lower than A. For selling, C cannot be higher than A. If C is passing A, then the AB equals CD pattern becomes invalid. With a buying scenario, C must be a higher low, which means C must be higher than A. In a selling scenario, C must be a lower high, which means C must be lower than A. Let me show you a sample of AB equals CD, both for buying and selling side by side in the same chart. This is the buying scenario, and this is the selling scenario. At first, it may be difficult for you to spot AB equals CD patterns in a chart, but practice will make it perfect. Train your eyes by looking at the chart. No need for an indicator. Here's the key. When you see a market make a new higher low, because you know the market has possibilities to get higher, get ready to buy. And when you see a market makes a new lower high, because you know the market has potential to go lower, get ready to sell. As I said previously, understanding highs and lows can be very subjective. It can make a lot of different scenarios from one person to another, but the market usually respects this simple AB equals CD movement. Let me show you how you can spot AB equals CD patterns differently in the same chart. These are AB equals CD buy on gold using the very same chart. Both charts above are the same, but you see, each of us may spot different AB equals CD patterns. Some may spot the big movement of AB equals CD. Others may spot small movements of AB equals CD. Nevertheless, it works all the same. The more you practice and train your eyes to spot AB equals CD patterns, the more you see opportunity both in small and big movements. Everyone's highs or lows can be different, but the AB equals CD pattern reflects this movement almost perfectly. Again, the key is, when we see a market making a new higher low, big or small, there is a high possibility the market will go higher. And when you see the market makes a new lower high, there is a high possibility the market will go lower. How low or how high the market will go is usually the same length or equal from its AB leg. Here's another scenario you may find interesting. It is very possible you see both buy and sell at the same area. That's why sometimes we see some traders buy and others sell. To show this situation, I will keep using the same chart so you can see the big picture of the many possibilities of how AB equals CD patterns work so amazing. Look at this chart, how AB equals CD buy and sell patterns appear at the same area. It's like AB equals CD patterns inside AB equals CD patterns. The big C is lower than A, thus we call it lower high. In another instance, the same spot level also was a D and was a higher high compared with previous B. So the same spot can be both considered as a lower high or as a higher high. It all depends on which previous highs or lows it is compared with. You need some practice to spot all these. My suggestion, keep drawing on your chart. Mark the AB equals CD patterns you can spot until you get used to it. Draw or mark big movement and small movements. You will be amazed how this AB equals CD pattern is often respected by the market. Obviously, sometimes this AB equals CD fails when the C price passes A. Here is an example where AB equals CD pattern fails. Based on my experience trading AB equals CD patterns, 2 failed out of 10. As you can see with the same chart, you see more AB equals CD that works beautifully than the ones that failed. Conclusion. To be able to predict the market direction pretty accurately, just use the AB equals CD pattern. You will no longer need a lagging indicator. Understand what is a higher high, a lower high, a higher low, and a lower low. Remember, you sell only when the market is forming a new lower high. You buy only when the market is forming a new higher low. C is the retracement of AB using Fibonacci. It usually reverses at 38.6% up to 78.6% and then goes to D. D is your profit target, usually around a negative 27% level of Fibonacci from the AB leg. Thanks for watching this video. I hope you really enjoyed this tutorial. Don't forget to share your AB equals CD patterns analysis in forums. By sharing with others, you also learn more. Trade safe and have a wonderful day.